markets closed the day on a tear here, clawing back some of the losses we've seen this week, but with Bitcoin nearing 100,000 and Nvidia delivering yet another earnings beat, how much room is left for markets to run, and where will the next catalyst come from? Joining us now is Kenny Polcari, partner and chief market strategist, Slatestone Wealth. Kenny, always good to see you. So you said something, Kenny, that caught my eye, because you've been trading a long time, Kenny. So when you write something, I pay attention. And when you look at the market right now, Kenny, look at the SPX, you said it looks a bit tired, Kenny. How come? What did you mean by that?
Listen, we've had this dramatic move in the market all year, but most recently since the election. And so I think, post the election, there was all that excitement that the election was over, it was done, it was behind us, it wasn't getting dragged out, it wasn't going to go to the court, there weren't going to be lots of challenges to it. And so there was that euphoria, I think, that first hit. But then people have to start to look back for a minute and think, okay, what happens next? What do we need to focus on? Let's think about what the Fed's doing. Let's look at the economy. Yes, it's great the election's over, but then we have to consider, cabinet appointments and what's coming next. And so I think the market, we ran right back up to almost 6,000 again. I think the market just feels a little tired. I'm hoping it pulls back. We haven't gotten it yet, but I'm hoping we see us fill that gap that it created on November 6th when it opened up 88 points from where it closed on Friday. There's a big gap there in the S&P, which I would like to think needs to be filled. So I'd like to see the market come back and fill that gap.
And so the levels you'd be watching on the SPX, the S&P 500, they'd be what, Kenny?
So they're the trend line, which is 50, I think it's 57.80 or 57.92, and then 6,000. So we're kissing 6,000 right now, so we're at the upper range of that. But I would expect us to come back and want to test the trend line, which again would also then fill that gap. I think it needs to happen. I actually think long-term investors would love to see some digestion and for the market to pull back, right? You don't want to keep seeing it go straight up, because as you and I both know, trees don't go straight to the sky. So at some point, there has to be some digestion.
What's the next possible catalyst for the market, Kenny? What would you be looking for? Is it that Fed meeting next month?
No, I got news for you. I don't think the Fed meeting next month, I think Nvidia stole all the excitement. I don't think anyone's really paying attention. I think Fed heads over the last week and a half, including J.J. Powell, has done a great job at trying to get the market prepared for no rate cut in December, which I agree with. I don't think they should cut. And I think that's what they're preparing the market for. So I don't think that's going to be a big market moving event. I think they're going to talk about it enough over the next couple of weeks that they get everyone comfortable with, we're okay where we're at, no rate cut, we're going to sit and watch it. So I don't think that's going to be the catalyst. I think the catalyst from a negative perspective is going to be a geopolitical event. And, we could talk about what's happening between Russia and Ukraine. We can talk about still the ongoing conflict in Israel and Gaza and Hezbollah and Iran and all that. But I think it's going to be a geopolitical event that causes the negative catalyst. On the positive side, if we get through that and that doesn't happen, on the positive side, people are starting to look clearly ahead to 2025. Look what happened today. The Dow rallied massively, right? So that tells you that the rally continues to broaden out and that people are very excited and they're positive, they're optimistic about 2025.
It's interesting, they're excited, Kenny, but it's so many cross currents coming at you at once with this administration. I'd love to get your thoughts on that, because you just have a ton to consider. I mean, you have pro-growth policies we can talk about, and tax cuts and deregulation. On the other side, you have to consider tariffs, immigration. How is an investor supposed to kind of look through that and navigate that, Kenny?
So I think it depends on who we're talking about. Are we talking about a long-term investor, somebody that's building a portfolio that wants it to work for them? Because that's very different than somebody who wants to day trade. A day trader wants to listen to the noise. They want it to be noisy all the time so that there's lots of volatility. But as a long-term investor, you need to be able to take some of that noise and just push it aside and focus on really what prices stocks in the long term. And what prices stocks in the long term is the economies, is economic policies, margins, profits, revenues. That's what really prices stocks. When you get actions, when you get movement in stocks, negative movements because of geopolitical events or election events, those are short-term chaotic events that create long-term opportunity for the long-term investor. So I continue to believe, and I am a long-term investor, and my clients are all long-term investors, is that you got to kind of eliminate a lot of that noise. You got to take it into account what's happening, but you have to build just a solid portfolio with some of the big mega cap names in the industries that you want to be represented.
Finally, Kenny, listen, long-time trader like yourself. I got to ask you about the moves we've seen in Bitcoin. Approaching 100,000. Obviously, hope is riding high on Trump returning to the White House, seen as a crypto ally. And it's not just Trump. I mean, important to remember. He has surrounded himself with that. I mean, Howard Lutnick, crypto guy. RFK Jr., crypto guy.
Right.
What do you make of the moves we're seeing, Kenny?
Right. Listen, I think it's great. We just saw Gensel's going to retire in January. He should have, because if he didn't retire, I guess he was going to get tossed out anyway. But I think all this stuff around crypto is very positive, because I do think crypto and blockchain is going to play a real role in the U.S. economy and the global economy going forward. So I am excited about it. But again, I also think it gets stretched a little bit. Again, it's that relief, it's that excitement, that euphoria about the election, about the regulation, about the support that crypto will have in the new administration. But I think you don't get yourself all caught up in euphoria. Still remain focused on where you own it, when you buy it, buying it on pullbacks, that kind of thing. Look, I was actually surprised today, and it might happen tomorrow because we're going into the weekend. I thought we were really going to kiss 100,000 today, just because we're just within $2,000 away from it. And that can happen very quickly, right? We could see that happen really overnight. I suspect maybe it's going to happen tomorrow. If it doesn't, it's probably going to happen next week, just because it's a big round number. I think they're going to make it happen just because it happens, and then we might see Bitcoin pull back a little bit. But I don't think it's going to pull back significantly. But I think you have to don't get caught up in the euphoria.
Kenny, always great to see you, buddy.
Always a pleasure to see you. Thanks for having me.